There's a famous quote by Benjamin Franklin, and no, it's not about light bulbs. He said, "There are two sure things in life, death and taxes." What if I were to tell you that's false? In real estate, you don't have to pay taxes. Stick around and find out how. I'm sure most people understand how capital gains works. You buy something at a certain price, and then when you sell it, you pay taxes on the difference, the amount you gained from that transaction. People are always planning and thinking about how to reduce this tax. They talk about strategies like tax loss harvesting or hold the asset for over a year so they can pay the taxes at a lower rate. If you invest in real estate, you don't have to worry about any of that. And here's why. In real estate, when you buy a property, it's categorized in two different ways. The first way is your primary residence. This is something that you live in. So it has to be a residential property, either a single family, condo, co-op, up to a 4-unit building. All of that can be classified as residential primary residence. For your primary residence, paying no capital gains is very simple. There's a simple rule that allows you to exempt $250,000 of capital gains on your primary residence. If you're married, that number goes up to $500,000 in capital gains. So that means if you buy a condo for $100,000 and then you sell it for $350,000, you pay zero in capital gains. The only thing you need to do is live in that property for 2 out of the last 5 years. And it doesn't even have to be 2 consecutive years. So you can live there for the first year, then you decide to move somewhere else and rent it out for 3 years. And then you come back and live there for the last year. Now you have 2 years. So now you're eligible for that $250,000 tax exemption. A $250,000 capital gains exemption is huge considering the average house in the United States only costs $200,000. Now, if you bought a property and that property appreciated like crazy, well, you're not limited to using this exemption once. So for instance, you bought this property for $100,000. Now, 3 years later, the area developed like crazy, and now houses there sell for $350,000. Well, you can decide to sell that house for $350,000, pay zero in capital gains, then buy another property. And in another 2 years, and you sell that property, you can use the $250,000 capital gains exemption again. So if you plan it properly, you don't ever have to pay capital gains on your primary residence. Now, before going on to the second category, investment properties, if you found this information useful, please hit the thumbs up so YouTube will start showing this video to more people. If you know somebody who you feel this information would be useful for, please share this video with them. You can help them save thousands of dollars in taxes. So the second category, investment properties. For investment properties, it gets a little more complicated. You don't have that simple $250,000 capital gains exemption anymore. But you have another tool called the 1031 exchange. The 1031 exchange is basically the tax code that allows you to sell a certain asset, then buy a larger form of that asset and not pay capital gains until you sell that larger asset. But the beauty is you can keep doing that over and over and over again and never have to pay that. So for example, if you buy a single family home and then a couple years later you sell it and then you buy a duplex, you can use the 1031 exchange and not have to pay the capital gains tax. Now, in a couple years after that, you sell that duplex and this time you buy a fourplex. You can just 1031 exchange another time. And then say a couple years later, you sell that fourplex and now you want to buy a 10-unit apartment building. 1031 exchange, zero capital gains. Now you want to sell that 10plex and you buy a 100-unit building. 1031 exchange, zero in taxes again. Now theoretically, you're gonna have to pay capital gains taxes on this eventually when you sell, but you can keep doing this until you pass away. And if you leave this property for your kids, well, they have something called the estate tax exemption. So in 2020, the estate tax limit is $11.58 million if you're single and 23.16 million if you're married. So that means if you keep 1031 exchanging until you pass away, your kids have an exemption as long as you left them less than that 11.58 million if you're single or 23.16 million if you're married. When that happens, your kid can sell the building the next day and pay 0 in taxes. But what if you're thinking, forget my kids, I want to use that money for myself. How do I not pay capital gains taxes while I'm alive? Well, here's how you do that. You only pay capital gains when you sell your property. So if you never sell your property, you just never have to pay capital gains. But you must be thinking to yourself, then how do I get the money out of it? You can refinance your property. If you refinance your property, you take a loan from the bank and you use your property as collateral. You can use this money however you want and you don't have to pay capital gains on it. Now this is a little more risky because you have to make sure the rental income is enough to pay back the mortgage that you take, or the bank might foreclose your house. But if you 1031 exchanged your properties all the way up to a $10 million building, what's taking out $500,000 to buy your Lamborghini? But let's say you're a simpler person. You don't need that Lamborghini. You just want a couple $1,000s every single month so that you can live off of it. Well, there's a way to do that as well. There are a lot of tax deductions, tax write-offs, and exemptions that you can take advantage of where you don't have to pay income taxes for your rental income. If you're interested in that, please stay tuned for my next video where I elaborate on that. It's going to be linked above here. Please keep in mind, the tax laws constantly change, and I'm also not a CPA, so this video is for informational purposes only. Definitely verify with your accountant if you can take advantage of these strategies. Anyway, that's it for this video. I hope you found this information helpful. If you liked it, please remember to hit the thumbs up. If you want to see more videos about personal finance and real estate, please hit the subscribe button. If you have any questions or anything for me, please leave them in the comments below. Anyway, thanks for watching. I appreciate it.